In a world that rewards speed, celebrates action, and demands constant connectivity. In a culture where busy is a badge of honor and stillness is seen as stagnation. The most profitable, the most powerful, and the most strategic move you can make in the financial markets is often to do absolutely nothing. This statement is a paradox. It defies our deepest instincts. From the moment we are born, we are taught that effort equals results, that action leads to progress. And yet, for the trader, this fundamental belief is the very source of their ruin. 99% of traders lose money not because their strategy is flawed or their analysis is weak, but because they are addicted to the act of trading itself. They don't know when to sit on their hands, protect their capital, and simply wait. Welcome to the art of doing nothing. This is not a guide to passive investing. It is not an invitation to be lazy. It is a deep dive into the most misunderstood and most potent skill in a trader's arsenal: strategic, disciplined, ruthless, patience. We will deconstruct the very anatomy of impatience, revealing why your brain is biologically and psychologically wired to self-sabotage in a volatile market. We will walk in the footsteps of legends like Jesse Livermore, a man who understood that fortunes are not made in the frantic buying or the panicked selling, but in the quiet, calculated sitting. This is not just a lecture, it is a complete framework, a documentary designed to transform you from an anxious, impulsive gambler chasing every flicker on the screen into a calm, disciplined sniper who conserves their energy, their capital, and their focus, striking only when the odds are overwhelmingly in their favor. By the end of this journey, you will have mastered the art of doing nothing, and you will finally understand why the decision to not trade is often the most profitable trade you will ever make. To master patience, you must first understand the enemy. And the enemy is not the market. It is not the algorithm, the hedge fund, or the news. The enemy is the 3-pound universe between your ears. Your brain, for all its marvel, did not evolve to trade financial markets. It evolved to survive on the savannah. And it carries ancient wiring that is disastrously unsuited for this modern battlefield of probabilities and pixels. Let's begin with the chemical that governs your worst impulses: dopamine. Dopamine is often called the pleasure chemical, but that's a misnomer. It's the motivation chemical. It's released not when you receive a reward, but in anticipation of a potential reward. The market, with its constantly moving prices and flashing lights, is the ultimate dopamine-triggering machine. Every tick up, every tick down is a whisper of potential, a potential win, a potential loss to avoid. When you see a setup that almost meets your criteria, your brain floods with dopamine. It screams, "This could be it. Don't miss out." The anticipation of the win is so intoxicating that it overrides your rational, analytical mind. You enter the trade not because it's an A-plus setup, but because your brain is chasing a chemical high. And when the trade works out, even by sheer luck, the reward system is reinforced. You've just taught your brain that impulsive action gets rewarded. You are quite literally training yourself to be a bad trader, one dopamine hit at a time. This creates a vicious feedback loop, an addiction to the action of trading, entirely separate from the goal of profitable trading. This chemical addiction is amplified by a powerful psychological flaw known as the action bias. Humans have a deep-seated bias towards action over inaction, even when inaction is the more logical choice. In ancestral times, this made sense. If you heard a rustle in the grass, it was better to run, action, than to wait and see if it was a lion, inaction. Action felt safer. It felt like you were in control. In the market, this instinct is inverted. When the market is choppy, uncertain, or simply not offering any high-probability setups, the logical choice is to do nothing. But that feels wrong. It feels unproductive. You're a trader. You're supposed to be trading. So you start clicking buttons. You enter a mediocre trade just to feel like you're working. You are choosing action, not because it's strategic, but because it alleviates the psychological discomfort of doing nothing. You are scratching a mental itch and paying for it with your capital. Researchers have even studied this in sports. Goalkeepers in a penalty shootout, for instance, tend to dive left or right, even though statistically staying in the center gives them a better chance of making a save. Why? Because it feels better to have done something and failed than to have done nothing and failed. That is the action bias at work, and it is silently killing your trading account. Now, let's add the most famous demon themselves, FOMO, the fear of missing out. FOMO is the action bias supercharged by social pressure and regret. You see a stock rocketing higher. You see people on social media posting huge wins. You weren't in that trade, and the pain of that missed opportunity feels immense. That pain is regret, and your brain is desperate to avoid feeling it again. So, on the next move, you jump in prematurely. You chase the price, entering at the worst possible moment, often just as the early, smart money is starting to sell. You are not trading based on your plan. You are trading based on the fear of a hypothetical future regret. You're letting the market's noise and the perceived success of others dictate your actions. FOMO forces you to abandon your discipline, your edge, and your strategy. It turns you from a proactive hunter into a reactive scavenger, picking up the scraps left behind by patient professionals. Finally, we must confront the deepest psychological trap, the gambler's fallacy and emotional accounting. The gambler's fallacy is the belief that if something happens frequently in a period, it will happen less frequently in the future, or vice versa. If you've had 5 losing trades in a row, you think, the next one has to be a winner. You feel you are due for a win. The market, of course, has no memory. The probability of your next trade being a winner is independent of the last 5. But this fallacy convinces you to take a subpar setup, believing cosmic justice is on your side. This is tied to emotional accounting. You stop seeing your capital as a tool and start seeing it as a scorecard for your self-worth. A winning trade makes you feel like a genius. A losing trade makes you feel like a failure. After a loss, you feel an overwhelming urge to make it back. This isn't a strategic decision, it's an emotional one. You're trying to repair your bruised ego, not grow your account. This leads to revenge trading, doubling down, taking huge risks, and completely ignoring your rules in a desperate attempt to erase the emotional pain of a loss. This toxic cocktail, a dopamine-driven need for action, a psychological bias for doing something, a deep-seated fear of missing out, and an emotional connection to your P&L is the engine of impatience. It ensures that the average trader is mentally and biologically predisposed to overtrade their way to a zero balance. To win this game, you cannot fight these instincts with willpower alone. You must build a system, a framework, and a mindset that make them irrelevant. You must learn the way of the lion. Right now, I want you to pause this video. Open a notebook or a document and be honest with yourself. What is your biggest trigger for impatience? Is it boredom? Is it FOMO? Is it the need to make back a recent loss? Write it down. Acknowledging the enemy is the first step to defeating it. We'll be here when you get back.
Imagine a lion, the apex predator, hiding in the tall grass of the savanna. It watches the herd of wildebeest for hours. It sees the young, the old, the distracted. It could chase any one of them. It could expend energy on a dozen different potential targets. But it doesn't. The lion waits. It watches. It conserves its power. It is studying the herd, waiting for the one perfect moment. It waits for the one animal that strays too far from the group, the one that shows a sign of weakness, the one that presents the highest probability of a successful hunt, with the least amount of risk and energy expended. And when that moment comes, and only when it comes, it explodes into action with absolute commitment and lethal precision. For hours, it did nothing. And that nothing was the most critical part of its successful hunt. This is the mindset of the professional trader. They are not a machine gunner spraying bullets everywhere and hoping something hits. They are a sniper, waiting calmly for the perfect shot. This mindset is built on a few core non-negotiable principles. The first, and most important, is defining your A-plus setup. You cannot be patient if you do not know what you are waiting for. A vague idea of a good trade is not enough. Your mind hates uncertainty, and without a clear target, it will convince you that any moving shadow is a viable opportunity. An A-plus setup is your perfect trade, defined with crystalline clarity. It is a checklist of non-negotiable criteria that must all be met before you are even allowed to consider risking your capital. This checklist could include specific technical conditions, like a certain moving average crossover, a particular candlestick pattern at a key support level, and a confirmation from a volume indicator. It could include fundamental criteria. It could include the time of day. The key is that it must be specific, written down, and treated as law. It is your personal constitution for market engagement. If a setup meets only 4 out of your 5 criteria, it is not an A- setup. It is a no. It is a trap. It is noise. By creating this checklist, you are externalizing your discipline. You are taking the decision-making process away from your emotional, in-the-moment brain and giving it to your rational, well-prepared, strategic brain. Your job is no longer to find trades. Your job is simply to watch the market and check boxes. When all the boxes are checked, you act. Until then, you are the lion in the grass. You wait. This leads to the second principle, capital preservation as your religion. The amateur trader wakes up and asks, "How much money can I make today?" The professional trader wakes up and asks, "How can I protect my capital today?" This is the most profound mindset shift in a trader's career. Your trading capital is not just money. It is your inventory. It is your lifeblood. It is your ticket to staying in the game. Without it, you're out of business. Your number one job is not to generate profits. It is to manage risk and preserve your capital so that you can be there tomorrow to take advantage of the opportunities the market gives you. When you truly internalize this, your relationship with inaction changes. Doing nothing is no longer a passive state of boredom. It is an active state of defense. You are not missing out. You are actively protecting your assets. You are honoring your first and most important responsibility. This mindset makes it infinitely easier to skip mediocre trades because you see them for what they are, not as small opportunities for a potential gain, but as unacceptable risks to your most precious resource. This sniper mindset was perhaps best embodied by a ghost of the stock market, a legend whose wisdom is more relevant today than ever. Jesse Livermore. Jesse Livermore, the boy plunger, was one of the greatest speculators who ever lived. He made and lost several fortunes, and his life serves as the ultimate case study in both the triumphs and the tragedies of trading. But his greatest successes were always born from one core skill, an almost superhuman ability to sit tight. Livermore famously said, "It never was my thinking that made the big money for me. It was always my sitting." Got that? My sitting tight. What did he mean by this? Livermore understood that the big, game-changing moves in the market took time to develop. He wasn't interested in catching small, erratic fluctuations. He was hunting for the inception of major trends. His strategy was to identify what he called a pivot point, a critical moment where the market's character was changing and a new, powerful trend was about to begin. He would form a market thesis, an idea about where the broad market was headed. Then he would wait. He would watch the tape, as it was called back then, for days, sometimes weeks, doing absolutely nothing. He was waiting for the market to confirm his thesis. He needed to see the price action align with his theory. He needed the volume to come in and validate the move. This period of waiting was excruciating for his contemporaries. They would be jumping in and out of the market, scalping small profits, while Livermore sat with his hands in his pockets. They thought he was idle. He knew he was working. His work was the patient observation. When the pivot point finally arrived and the market confirmed his analysis, he would act decisively. He would establish his initial position. But even then, his sitting had only just begun. If the trade moved in his favor, he wouldn't snatch a quick profit. He believed that was the opposite of the cardinal sin of trading. His rule was to never cut your winners short. If he had correctly identified a major trend, his job was to ride it, adding to his position as it continued to prove him right. This is where his real fortunes were made, not in the entry, but in the patient holding of a correctly identified trend. He would sit through normal pullbacks and corrections, unfazed, because his initial thesis was still intact. This allowed him to capture moves of a magnitude that impatient traders could only dream of. Of course, Livermore's story is also a cautionary tale. In his later years, he broke his own rules. He became impatient. He started trading for action, trying to force the market to give him money to pay off his debts. He abandoned his sitting philosophy, and it led to his final tragic ruin. His life provides us with the perfect duality. His monumental success was a testament to the power of strategic inaction. His ultimate failure was a stark reminder of what happens when you abandon that discipline. He proved that you can have all the analytical genius in the world, but if you lack the fortitude to sit and wait,
The market will eventually reclaim everything you have.
Let's pause again. Do you have a written, non-negotiable checklist for your A-plus setup? If the answer is no, you don't have a trading plan. You have a gambling habit. Your task is not to watch the rest of this video. Your task is to pause and write down at least 3 specific, measurable criteria that define your perfect trade. Don't continue until you have them. This is the work. Philosophy is worthless without action. A mindset is just a dream without a system to enforce it. This section is the operator's manual. It contains practical, actionable frameworks you can implement today to build the muscle of ruthless patience and protect yourself from your own worst instincts. First is the concept I call the 4 trades a month rule. I read a story years ago about a highly successful trader who had a simple, powerful rule. He was only allowed to take a maximum of 4 trades per month. This wasn't because his system only generated 4 signals. It was a self-imposed constraint to force him to be incredibly selective. Think about the psychological power of this. If you only have 4 bullets for the entire month, you are not going to waste one on a mediocre B-grade setup. You will treat each potential trade with the seriousness it deserves. You will wait and wait and wait for a true A-plus opportunity because your resources are finite and precious. You can adapt this rule for yourself. Perhaps it's 1 trade a day or 5 trades a week. The specific number doesn't matter as much as the principle. Introduce scarcity into your trading. When you have an infinite number of potential trades you can take, each individual trade feels cheap and inconsequential. When your trades are a scarce resource, their perceived value skyrockets and your discipline naturally increases with it. Force yourself to be selective, and you will be amazed at how the quality of your chosen trades improves. Second, you must architect your environment for discipline. Your environment has a profound impact on your behavior. If you want to stop eating junk food, you don't keep it in your house. If you want to trade with patience, you must design your environment to promote it. This starts with your trading station. Is it cluttered? Is it filled with distractions? Do you have financial news blaring, feeding you a constant stream of noise and opinion? This is an environment built for impulsive action. Instead, create a sanctuary of calm and focus. Use a clean chart setup with only the indicators essential to your A-plus setup. Eliminate all non-essential information. Turn off the news. Put your phone in another room. The goal is to create a low-stimulus environment where you can observe the market objectively without being constantly prodded into action. This extends to your daily routines. A structured pre-market routine is crucial. This is where you review your A-plus setup checklist, read your trading plan, and mentally prepare for the day. You remind yourself that your goal is not to trade, but to execute your plan flawlessly. A post-market routine is equally important. This is where you review your actions. Did you follow your rules? Did you skip the trades you were supposed to skip? This creates a feedback loop centered on discipline, not on profit and loss. Third, and perhaps the most powerful technique, is implementing the if-then protocol. This is a concept from behavioral psychology, also known as an implementation intention. It's a way of pre-programming your brain to handle difficult situations. Instead of relying on in-the-moment willpower, you create a simple rule in the format, if blank trigger situation occurs, then I will blank pre-planned response. You need to identify your personal triggers for impatience. Is it boredom during a slow market?
Is it the anxiety of seeing a fast move you're not in? Is it the frustration after a losing trade? Once you know your triggers, you create your protocols. For example, if the market has been consolidating for an hour and I feel the urge to trade out of boredom, then I will stand up, walk away from my desk, and drink a full glass of water. If I see a stock making a huge move that is not part of my plan, then I will close my trading platform for 5 minutes and read one page from my trading psychology book. If I have just taken a loss and feel the urge to revenge trade, then I will immediately end my trading session for the day, no exceptions. These protocols are incredibly effective because they remove the need for conscious decision-making in a high-stress emotional state. Your response becomes automatic. You are no longer fighting your urges. You are simply following a pre-written script. Fourth, you must learn to use your journaling for patience. Most traders use a journal to track their entries, exits, and P&L. This is good, but it's incomplete. Your journal should also be a tool for tracking and reinforcing your patience. Create a new section in your journal titled Disciplined Non-Trades. At the end of each day, write down the trades you didn't take. Note the setup and why it almost met your criteria but was ultimately a no. Write down how you felt when you let it go, and then congratulate yourself for following your plan. This simple act reframes your entire perception of success. It provides tangible evidence of your growing discipline. It gives you a win for the day, even if you placed 0 trades and made $0. You are actively rewarding the behavior you want to cultivate. Over time, you will derive more pride from your list of disciplined non-trades than from any single lucky win, because that list is proof that you are becoming a professional. Finally, you must understand the screen time fallacy. Many traders believe that more screen time equals more opportunities and better results. This is a dangerous lie. There is a huge difference between active, focused analysis and passive, anxiety-inducing screen staring. More often than not, prolonged, unfocused screen time simply exposes you to more temptation. You see more noise, you feel more pressure to act, and your decision-making fatigue sets in. Your ability to resist impulsive trades diminishes with every passing hour. Set specific, limited times for your market engagement. Perhaps you focus intensely on the market open for 2 hours and then for 1 hour near the close. During these times, you are a hunter. You are actively looking for your A-plus setup. Outside of those times, you walk away. You disengage. This not only preserves your mental capital and willpower, but it also creates a sense of urgency to be disciplined during your active hours. You know your time is limited, so you won't waste it on garbage setups. Less can be more. Deliberate, focused, and limited screen time will almost always produce better results than being glued to the charts all day. These are not suggestions. They are components of a system designed to protect you from yourself, to force the mindset of the lion, and to turn the abstract philosophy of patience into a concrete, daily practice.
You've just been given a complete toolkit, but knowledge without action is useless. So, one more pause. Look at the frameworks we've discussed. The 4 trades rule, the if-then protocol, journaling for patience. Which one of these will you commit to implementing, starting tomorrow? Not all of them, just one. Write down that commitment. An unwritten goal is just a wish. There is a critical and often misunderstood distinction to be made. There is a fine line, a razor's edge between disciplined strategic patience and fear-based hesitation. One is the hallmark of a professional. The other is a form of self-sabotage called analysis paralysis. Disciplined patience is active. It is a state of calm, focused readiness. You know exactly what you are waiting for, and you are prepared to act with decisive force the moment your conditions are met. Fear-based hesitation is passive. It is a state of anxiety and uncertainty. You might see your A-plus setup appear clear as day, but you freeze, you second-guess, you wait for one more confirmation. You look for a reason not to take the trade. The perfect moment arrives, and you watch it pass you by. This paralysis often stems from a string of recent losses that have shattered your confidence. You are so afraid of being wrong again that you're unwilling to take any risk, even a well-calculated one that fits your plan. You have moved from being a patient lion to a frightened mouse hiding in the shadows. So how do you know the difference? How do you ensure your patience doesn't curdle into fear? You must constantly self-diagnose by asking these questions. Am I waiting for my defined setup, or am I changing my criteria on the fly? If your A-plus setup appears and you suddenly feel the need to add a new rule or wait for another indicator to align, you are likely operating from fear. The patient trader trusts their plan. The fearful trader distrusts their plan at the moment of truth. Is my emotional state calm and objective, or is it anxious and scattered? Patience feels like confident stillness. Hesitation feels like nervous anxiety. If your heart is pounding and your mind is racing with what-if scenarios, you are likely in a state of fear, not disciplined readiness. Am I focused on the process or the outcome? The patient trader is focused on flawless execution of their plan. They know that if they follow the process, the results will take care of themselves over time. The fearful trader is obsessed with the outcome of this one trade. They are terrified of taking another loss, and that obsession with the immediate P&L paralyzes them. If you find yourself slipping into analysis paralysis, the solution is not to force yourself to be more aggressive. That will only lead to reckless trading. The solution is to address the root cause, a loss of confidence. This means you must go back to basics, reduce your position size, reduce it to the point where the financial outcome of the next trade is almost meaningless. Your goal is not to make money. It is to retrain your brain to execute your plan without hesitation. Take 10 trades with a tiny size where your only goal is to pull the trigger the moment your A-plus setup appears. You are rebuilding the habit of execution. Confidence is a byproduct of successful execution. By focusing on a series of small, perfectly executed process wins, you will rebuild your confidence on a solid foundation. You will prove to yourself again that you can trust your system and, more importantly, that you can trust yourself to act when the moment is right. Patience without the ability to act is worthless. It is the coiled spring that never releases. Your task is to cultivate the stillness of the sniper, but also the sniper's unhesitating trigger pull when the target is in the crosshairs. That is the balance that separates the master from the amateur. We began this journey with a paradox, that the path to greater profit is often through greater inaction. We have traveled through the flawed wiring of our own minds, walked with the ghosts of market legends, and built a practical, actionable system for cultivating discipline. Now we stand at the end, and the final transformation becomes clear. The greatest edge in trading is not a secret indicator, a complex algorithm, or a guru's hot pick. It is the ability to master your own impulses. It is the quiet strength to sit and wait, while others are burning through their capital in a frenzy of meaningless action. You must redefine what constitutes a winning day. A winning day is not necessarily a profitable day. A day where you make money on a sloppy, impulsive trade is a net loss because you have reinforced bad habits. A day where you place 0 trades, lose $0, and perfectly follow your rule of waiting for an A-plus setup is a massive victory. It is a deposit in your discipline account, and that account is the one that compounds into a fortune over time. The journey from an impatient trader to a patient professional is the final and most difficult step towards true financial freedom. It requires you to unlearn a lifetime of conditioning. It demands that you find satisfaction not in the thrill of the gamble, but in the quiet pride of flawless execution. The market will always be there tomorrow. The opportunities will come. Your job is to ensure that you are still there to take them. And that is achieved by mastering the art of doing nothing. It is achieved by becoming the lion, the sniper, the patient professional who understands that in the thunderous noise of the market, the most powerful sound is often silence. Now, the work begins. In the comments below, tell me the one rule you will implement this week to practice strategic patience. Let's hold each other accountable. Subscribe for more deep dives into the mindset of professional trading.